right. Hey, I'm ready. I'm ready. It's working. So, let's hope you all come back. Oh, there you are. Yay. Thank you. Thank you for coming back. I don't know if you got to hear me, but hello, George. And, oh my gosh, I'm terrible with names, you guys. Here I am on a live telling you that. Um, Good morning, Brett. Good morning, Tracy. Hey, Dusty. Well, look at you guys. Oh, now you're coming in like crazy. Oh, Dusty, you'll get like a little Facebook award. Look at you. And Erica, you get a little Facebook award as well. It's like your 1 year badge or something for liking me. Thanks for the year. Okay, I don't know if we lost my George and the other three that were on this morning, but good morning, Nikki. Am I on the right page? Yeah. Nikki, I just wanted to make sure I wasn't on my personal page. Okay. We got some good stuff this week. Maybe I'll save the best for last. I don't know. But I'm telling you, it's kind of in the middle. But we had a little bit of German Passion come out this week. Yeah. Sometimes it just happens. And there's like... Because there's not a filter. You know? There's just... I wish I had a filter. I wish I could just install a filter. But there's just really not one. I'm just gonna blame being German on all of that. I'm sure there is no connection. However, it just so happens that somebody got yelled at this week. May have lost him as a client. Still don't really care. But we had the last 2 weeks, I got a lot of people to go over, so I apologize for being late. Good morning, Michael, and Merry Christmas to you. Hey, Bruce, how were you at today? All right, so let's get started. So first we've got, I actually had, in the last couple of weeks, it is not really super normal. Good morning, Caleb. It is not really normal for me to see big, huge farmers. And I love big, huge farmers, and that's what my family does, and so I understand it really well. But it is really funny how in the last couple of weeks I have talked to a lot of regenerative guys, and we have talked about why I have so many regenerative agriculture clients versus having clients that are your traditional bigger size farmers and bigger size operations. And so this week the last couple weeks I've had a couple of them bigger size operations. It is just a difference in mindset. The regenerative guys are already aligned with doing something different. They are already out of the norm, understanding people question them, understanding other things can work. Not that traditional farming does not work. It's just that they are already a little more apt to looking at things. My traditional farmers, I love them. This works for them, but because they are on such a large scale and their inputs are so high, it's like they can't get their mind around, well, I need $1 million and you can't give me $1 million overnight. So not good enough. And so it's very interesting that I've had a couple in the last couple weeks that are about 4,000 acres. Which isn't massive in my neck of the woods. That's a medium-sized operation, or like small to medium. I mean, medium could even go to, 6,000-7,000, and then anything above that is going to be your larger scale operations or bigger even. I mean, I do have clients that have 25,000 acres, so it just depends. Okay, with all that being said. Gosh, we have all kinds of you today. That's awesome. Good morning, Tony. You also got a badge. Good morning, Lee. You got a 2-year badge. German passion you, no way. Oh, Idaho. Oh, Bruce, you're awesome. Look at your badge, says 4 years, and you've been with me since the beginning, my friend. Okay, so we have one operation that they are renting land from dad and uncle. Or he is renting land from his dad and his uncle. Here is the crazy thing, and he has been doing regenerative agriculture. And he said that he is going to be going through the Ranching for Profit school, which is awesome because he did not know his numbers. Nobody really does his books. They take it into the accountant once a year. And so although we can get started on his operation, because it's not a massive operation, he's still making money. It's not that he's not. It's just we don't know where it's going. And so I can't come in and say, oh, yeah, we're doing this or we're doing that, and we're making, and you're making a lot of money. The one thing that was happening is he did a contract for deed with the neighbor. And she had him making like $30,000 payments a year. He said those were killing him. And so he had her readjust the loan and reduce the payment. So my question is, in that reduction, the difference between what you were paying and what you're paying now, even though it was killing you, you were making it. So now you have a lower payment. Where's all that money going? Before you were committed to making that payment to buy that land, where is that money going? And the other nice thing about him is he's got 2 owner financed properties. Well, one is by somebody that's 90. We're probably at the end or close to being at the end of that gentleman's lifespan. And so we don't necessarily want to say, oh, can I keep going with the contract for deed payments? Because this guy, he set these contract for deeds up with a balloon payment. On the lady, she's in her early 80s, and in 2 years, he's supposed to be doing a balloon payment. Why? Like, if she's charging you interest, making interest, paying less on capital gains every year, why buy her out? Why not just keep having her finance you as long as she will? In the contract, can you talk to her attorney and put in there that upon her passing, we will buy out her estate? But if she lives another 10 years, which she seriously could, he's either going to give that 3% to the bank or he's going to give that 3% to her. And if everything's been working and they've had a good relationship and she's already redone the loan once because she obviously likes him, wants the land to stay in the farm ground, then fantastic. Approach her with it and see, exactly what she would say or think or whatever. So that was nice to see that one guy has 2 contract for deeds with 2 different people. And again, those contract for deeds are nice because you don't need to have 30-40% down, which is what most banks are wanting for farm ground. That I have heard still. You can get by with a little less in some places, depending on the circumstances. Yes, I have heard that. But anywhere between 20 to 40% down or 25 to 40% down, that's a lot of money and stops a lot of people from being able to buy that ground. All right. Good morning, Stasha. How's it going? Good morning, Lee. Okay. Then I had another one that he's farming 4,000 acres. Dad owns a little bit of that 4,000 acres. But here's what happened. Grandpa's estate plan was, oh, hey, we're going to give it to all the kids. Right? And so if we give it to all the kids, that means now these kids are passing, aunts and uncles are passing, and the cousins are saying, well, we don't really want all this land, but we want it to stay in the family. So this guy is super fortunate to have all of these family members coming to him and saying, hey, could you buy some land from us? And that's great. But now he's got a lot of land notes, right? And dad is too old to have insurance on him. That was kind of the theme of the last 2 weeks as well. Dad, uncles, whatever, are like in their 80s. And so it just does, like, I can't look at those numbers and say, oh yeah, that's a great idea, when we could actually just create more cash value in a policy on a younger person. Yes, we have to borrow it, but I'm not opposed to making a 20% rate of return. It's just I'm used to making about a 40 on the death benefit side, right? So 40 cents on the dollar, I guess I should say it that way. So it is definitely it's harder for me to look at an 80-year-old and justify writing a policy on them. Circumstances change all the time, but nobody has a ton of money to just stick in these policies right now. So for him, absolutely, we could get something started, and it's going to be on the small side because he has a lot of loans. Not bad. It's not a bad thing. He's paying for them all, and he's not buying things that he does not need. It's just that he is farming. He doesn't have adult children that are helping him yet, and he's doing it all on his own, paying rent. Now, here is one thing that I asked him. I said, if you're paying rent to Dad. Yep. And he said, and I'm going to get to buy it from my siblings when Dad passes. You're going to get, and he's like, at a discounted price, of course. They're not, that it's going to be at whatever the taxed value is, not the actual going rate of the land. Okay. So are you really getting a deal? You're paying rent now, and then you get to buy it later. So I want you guys to think about this. And if you are an older farmer watching this, think about this. You give it to your kids to rent. They rent it for 10, 15, 20 years, and then they get to buy it. And if they get to buy it at the going price, they actually probably bought it 1.5 times, maybe 2. If they get to buy it at a discounted price, it's not really discounted because of the fact that they paid you rent. Okay, so could we make one small change and say, if you're going to pay me rent, that is going to come off the purchase price, no matter what that price is. We're going to come off the price of the tax assessor, or we're going to come off the price of the total purchase price. We have paid for you to live because that was your retirement plan. Good or bad, that was your retirement plan. But now we get to pay for it again. This is why we are losing land. This is why we're losing family operations. Because the younger generation is looking at this and saying, that maybe was done like years ago and all good, but when you run the numbers, it absolutely doesn't make sense. And it does not make sense in an environment where land is $13,000 an acre for cropland. Okay? I've even come across pasture land at $8,000 an acre. There is no way anybody, even if if you had to buy it, there is no way if you have to buy that to make that pay for itself. And if you're going to use other land as collateral, that land was paid for. I mean, if you go purchase it and then farm it, it's not going to make that payment. Okay, so when we're handing off land, do we really need to be paying for it twice? Let's think about it. And if you are the younger generation watching this morning, and it looks like I have a lot of younger generation. If you are the younger generation watching this morning, I'm sorry, I don't know how to get mom and dad to understand that. Remember, you guys, I'm German. I don't care if stuff is fair. I don't care if it's equal. I don't care if I hurt somebody's feelings. In my family, you know, if I'm not happy with you, this is not a hidden thing. I don't pretend. And so I wish that I had, it's not that I have no feelers. It depends who you ask. Of course I have feelings, but for me, it's very much a business transaction, right? We worked our butts off to build our operations, but yet it all has to be fair or equal. And we may have children that were not farming for 40 years or better, but yet it should be fair or equal. Is that saving our operations, or is that killing our industry? To me, it's killing our industry. And we have to do it differently. So when I hear somebody say, I get to buy it after you paid rent, well, lucky you. Like, did you just win the lottery? And I'm not picking on the guy that said that. It's just a general comment, right? That we have been led to believe that we're so lucky that we got to purchase it again. Again. Okay, I'm going to get off my soapbox. So now he's getting to buy all this land and from his aunt and uncles, which is awesome because he would not have gotten to do that, right? They could sell to anybody. But he also gets to buy land from dad. And I've had a couple of these the last 2 weeks because that's normal. I mean, that just is happening all the time. All right. Oh, Stasha, I totally forgot about your season. I mean, I remembered what you were doing, but I forgot that. I guess I didn't know when your season started. Why did I think it was spring? Why did I think you tapped your trees in the spring? Good morning, Miss Gail. Hey, Steve. You are the younger generation. Soon to be the older generation. Oh, Steve, you're fun to pick on. All right. Had another client that absolutely not farmers, nothing to do with farming. He is a real estate appraiser. But here's the thing. My business owners are very much like farmers, right? He is a business owner. He is in the first year of appraising. And I did not know anything about real estate appraisers. I have not had one as a client before. And so they don't really know if they're going to get work, even though the bank isn't supposed to know who their appraisers are. They have their systems of selecting people. And so people can be selected based on favoritism, right? And those relationships that are built. And so for him, it's just a little bit, the income was really good, but we don't know where it's going to go. The best part about these people, big Dave Ramsey followers, big, to the point of it is rare. I don't know that I've ever seen somebody actually doing what Dave says to the T. These guys are doing what Dave says to the T. And I have a lot of Dave Ramsey followers that are clients. They have 3 or 4 separate bank accounts. They have a ton of money in a 401k. They have a mortgage for a debt. That's it. They put money into savings. Every single week, they are saving up for their kids to go to college. So here is the thing with them. They have 2 children. One has 1.5 years of college left. It's about $15,000 a semester. The other one is a junior, and she is going to be going to college, obviously, in a couple of years. And so they want to have 40 to 50, they want to have 40,000 saved. Grandma's going to kick some in. So they want to have $40,000 saved. That is the goal. And when she turns 18. Okay, let's think about this. When it doesn't matter, the kids are going to overlap in college, so they're not going to need a year where they have a lot more. I have Bruce, you threw me off. So I was telling them, so you're going to compromise today and not use any of this $40,000 for anything that could create cash flow. And he was just telling me the income that he made, he had to work 7 days a week for. Okay? So he said, I don't know that that is sustainable. I don't know that I will be able to constantly do that. This was year one. I'm trying to build a reputation, trying to get my feet off the ground. But I don't know that I'm going to be able to do that forever. So with that being said, I'm like, okay, so his wife does not work. He's working, and he doesn't know if he can sustain that, or he doesn't really have the business model down to develop it and increase more income without him actually physically doing the work. Because he's in a rural community, he is having to drive a long way to do these appraisals. It is taking him it might take him all day to do one appraisal. Where if he's not rural and he's in a city, he can do, 3-4 of them a day like his brother is doing. And so I said to him, well, do you want some cash flow? Yep. Our friends have short-term rentals. They're doing Airbnb, VRBO stuff. Fantastic. They're making good money. Yep. Would you guys want to do that? Yep, but we have to get the kids through college first. So we got to save that $40,000. But we're only going to need $15,000 a semester. Okay. So if we have 2 semesters, then we only need enough money to get through the year. Then we have all year to pay it back. Because they're such good savers, that's not a big deal for them to save that amount of money in a year. So why don't we just use what we need for the year? Say it's 30 grand. We save the 30 and we use that for the son. Okay? Then we pay it back, and he needs it next year again, so we use it for him next year. Then we pay it back and we reuse it for the daughter. And we pay it back and we reuse it for the daughter. And we do that for 2-4 years, whatever it's going to take her to get through college. So did we need all 4 years of college saved up at once? Nope. We just needed it 1 year at a time. So now we have all this money we're putting in savings, all this money we're putting in 401ks and self-directed IRAs. We have all this money we're having savings for a car, for vacation, for emergency, right? We have all these accounts, but we don't have anything creating cash flow. So what if we just saved 1 year's worth of college and used all this other money to buy a short-term rental like their friends and create 4 or 5 grand a month? Because that's what most of my short-term rental clients are doing. And I have a lot of farm clients. The majority of my clients are farm clients, but they also have short-term rentals. And so I have a lot of clients doing short-term rentals, making $4,000 or $5,000 a month. Even if we can make $2,000 to $3,000 a month, is that better than having to work 7 days a week and hoping that we get these jobs? These guys are great. They know their money. They know, his wife knew exactly where everything was going. They have a budget. They live by the budget. Dave Ramsey should be proud. Where Dave Ramsey should not be proud is teaching them how to create cash flow. And maybe I'm not all up to speed on Dave Ramsey, but I do know I have a lot of friends that are business owners, and Dave Ramsey has leadership stuff. Why is he not teaching his financial followers to start a business, how to run a business, how to create cash flow? Dave himself is creating cash flow better than anybody, but it's a big secret. We can't tell you how to do that. No, you go work for it 7 days a week. What if we took money from one of the emergency accounts and said, that's a down payment on a property. And we can make $4,000 or $5,000 a month and have that replaced in 6 months. You have to think about cash flow, right? They are doing absolutely everything perfect. But like other Dave followers that I have that I've talked to, what happens when the market crashes? What happens when the economy gets shut down? Now we have to go to that emergency fund and drain it, but we can't replenish it and we can't continue to live when it's gone because we don't have the cash flow. Do we want cash flow from multiple sources? Absolutely. Absolutely. So think about that. Being debt-free is awesome. It's awesome. But the bum on the street is debt-free, begging for cash flow. These guys are going to be in the same situation. And he is an appraiser. He is concerned that if interest rates rise, his job, he is not going to have the houses to appraise. His income is going to fall. Holy moly. If that is the case, then we need to create another source of cash flow that is there no matter what. And maybe it's all different places. If the economy crashes, are people still going to go on vacation and need to rent a VRBO? In my opinion, yes, because we as Americans do not give up our stupid sports, which I do not like sports at all. Don't care about them. Think they are a waste of time, but everybody loves them, right? Because it's something happy to do. People will not stop going on vacation because it's something happy to do. We need a break. That's what we all say. People that don't have any money, they're always going on vacation. I see it on credit card statements, right? Or I see it in credit card debt. There are people that are always going to go on vacation to relieve their stress, even if their stress is financial and they can't afford the vacation. So for me, will it hurt the economy? Maybe for a short time, right? But do we want to have a business in a different avenue then to protect ourselves? Yes, we do. Putting money in 4 different savings accounts and not understanding cash flow is not helping anybody. So we had a very nice conversation because I'm not going to beat Dave up for most of what he does. I totally agree with. I am not going to beat him up for that. I am not the person that can sit here and tell you how to do a budget. Nope. Not this personality. Not happening. And so he does a great job there. These people have money. They already are in the mindset. They've already beat Parkinson's law. Thank you, Dave. We just are missing one tiny little piece, and that is what I am happy to help with. Okay. I had another client that had lost her first husband, had a ranch, sold it, bought a new ranch, and moved closer to where her new husband's job is kind of based out of. And so they too she was doing okay, but she took all the sale of her ranch and paid off all of her debt. I don't know what that debt looked like. I am hoping that some of it would have not, that she could have just kept making payments on it, because now they have nothing saved. Her new husband is a truck driver and his engine went out in his semi. And so now we have no money saved at this time. They do have a lot of hay sitting around, and we all know hay is worth gold right now. And so they do have quite a bit of money sitting all bailed up. And she could get into that money at any time. So they can start very small, very comfortable as they grow into their new operation. Because she still has some cows, but now they're in a new location. They need to find some land to rent, add some cows to the equation. And of course, my advice to her was, please do not borrow money for cattle. I do not like it when people borrow money for cattle. But it was actually a really nice conversation that we had. And her first husband did have life insurance. And thank goodness, she said, because that was seriously needed. But it was just a good conversation to just talk about, the mourning period and how you keep going after you lose your husband somewhat suddenly, and young, very young, in his 40s. Okay, I talked to another gentleman that has an off the farm job, and they just started. They rented some land. They have 150 head of cattle. He's an electrician, so he has a really good job. And his wife flips houses with his dad. And the reason that they are doing that is because dad ranched, but did not have an exit strategy. And so we don't have anything, we have no money for retirement. So they are flipping houses so that dad can have something to do all day, but they also have some income for them. Now, here's the thing in this situation is they are sort of taking care of mom and dad financially. Okay, because they could be keeping all this money for these houses. They wouldn't necessarily maybe need dad. And then mom helps as well, and then they compensate mom a little bit too. And so that they've got some income. So we do have a situation here where I don't think we can do anything on dad, but we can possibly do something on mom to where we can have some death benefit, because we are going to have to most likely pay for funeral costs, take care of any of their expenses, those sort of things. So there is some insurable interest there. And those are some things, I've run into this a couple of times. I had another client this week that is not a farmer, and he is a physician. He also is giving money to his father every month so that he can help with some of those expenses between him and his brother. And so if we are giving money to parents to take care of them financially, then if they are young enough and healthy, meaning, late 60s, really early 70s, can we insure them so that we are not also having to come up with a ton of money at funeral time to pay for all of that stuff as well? Can something help a little bit with those costs? Speaking of my physician, that was a very interesting conversation, because y'all know that I do not target physicians in my marketing. I love my blue collar workers, electricians, plumbers, welders, truckers, like those are my people. And so when I get a physician, I've only had a couple of them over the years, but it was eye-opening to me that we were talking about short-term rentals, because he has somebody that he works with that has some short-term rentals, and they are making, $4,000 or $5,000 a month. And he said, maybe that's something that I need to look at, because he is sticking all of his money into IRAs, which is what obviously his accountant is telling him to do, because he's a large income earner. And then at 72, he's going to be in trouble. But he too wants to have some passive income. And he made it. And so I was looking online, because he was trying to tell me about this course that these doctors set up. And so I was looking. It is absolutely crazy to me how many people in industries, it doesn't matter, any financial industry really, are targeting doctors because they're high income earners. I said to him, how do you know who to trust? Like that, it was insane. I had pages in Google, and none of them were the same people. It was all different businesses targeting these physicians. I feel bad for these physicians. It's like, oh, I'm a doctor. Okay, put a sticker on my head and with a target, right? And how many scammers are out there? I was flabbergasted, because it's just not something I've ever looked at before. Anyway, his wife, they do want to buy some land and have horse stables, because she does dressage riding. And so obviously that is something to where you need some high-end horses, you have some high-end clientele. And so they want a whole riding arena and all this good stuff. And so that's exciting. But how are we going to pay for that if he isn't going to work? He does not plan to retire at 65 years old. And so he definitely has some time left. But he made a comment that said, I came from nothing. I did not grow up in an environment where people had money. Nobody taught me what to do with my money. Now, all I can do is talk to other physicians. So that also was a big eye-opener for me, is he's not the only physician that has come from nothing, right? And it's like winning the lottery. So I've never had money to manage. Now I have all this money, and now I have to figure out who to trust to not steal it and tell me what to do with it. That, I just had a lot of eye-opening conversation with him because it's just not my typical clientele, right? And so we got to figure out what to do with him. Because he's just, it's a mind shift. Are we going to do some land purchases? Are we going to do some short-term rentals? What is the best use for his money? Oh, he does have some whole life insurance that's got a ton of cash value in it because somebody sold him, his wife, and his 2 children, somebody sold him some 10-pay policies, which means you only put money in for 10 years. And that's a lot of money for 10 years is what he's putting in. And they're decent policies and their whole life. And so kudos to that person for teaching him or for telling him to do that and for him seeing the benefit of it. But he didn't really understand he could borrow the cash value from it. And so now, great. Now we've got a bunch of money to borrow cash value as a down payment for this, ranch property that he wants. His ideal thought process was, I am going to borrow against my 401k, use that as a down payment for my ranch property, and then when I sell my house, I'm going to pay it back to my 401k. Why even bother with your 401k? You have all this money in cash value. Use that as a down payment for your property. And if you can rent your house out on VRBO and make $6,000 a month because he's got a nice home, do it. Try it. What's there to lose, right? The life insurance companies don't care when that money gets paid back. So go for it. So we had some strategies there. All right. Then we had another one that it was a father and a son, but the dad and the brothers owned a C corporation, and they are larger size farmers too. They owned a C corporation and they farmed together. The one brother is getting out. And they're buying the older brother out, but the son is coming back in. And so they already have life insurance on everybody, just like they're supposed to, which is absolutely fantastic. We just need to add the son to the mix. And they have a lot of death benefit on everybody, but it is term insurance. And so some of that needs to get converted over to whole life because at some point we are all going to pass away. The other thing is what happens when somebody passes away? And we're in a partnership, okay? Does that go to the spouse? Does it go to the children? What happens to their shares of the corporation? And I had a client that I talked to yesterday, an existing client, him and another guy started a corporation, a business. And I said, what happens if your partner dies? Does it go to his wife? Does it go to your wife? And he's like, well, I would assume it does. I said, not always. I said, if I'm your partner, do I want to be in business with your wife? I may not like your wife. I may not get along with your wife, right? And if that's the case, then I don't want to be in business with her. Or what happens upon your death, and then I am in business with your wife and she wants to be bought out, and I don't know how that's going to happen. And so can we have, in his scenario, could we have life insurance that the company owns and life insurance outside of the company that I own on you? So inside the company, great, it goes into the company and it just gets absorbed into the company. But if your wife is now owner of the company and the death benefit got put into the company, I'm not using that death benefit to buy her out. she's getting half of it because it now becomes an asset of the corporation and I am owners with her. But if I have one outside of the company and death benefit on you, now I can use that to buy her out. Okay? So these are all things that need to be discussed upon creating a corporation. Or if you've got a corporation, please address those now before everybody hates everybody. Okay. Does the death benefit qualify as part of an asset upon somebody's passing? I'm assuming so, but I don't know everything, not even close to it. Ask the attorneys. That's their job. Okay. But these are questions that you can then go to the attorneys with. Because so many people don't think about what that all looks like. And let's be honest, I probably wouldn't either if I wouldn't see some of this stuff happening on a daily, monthly, yearly basis with existing clients or people I talk to. Okay, here's where the German passion comes out. So, the last guy I want to talk about is I had a father and a son. They farm, they have an orchard, apples, blackberries, which is very fascinating to me because I don't talk to people with orchards very often. And so only my Holly, that's on here all the time, and she is on vacation today, so she's not here. But they have blackberries, cherries, all that good stuff. But what was interesting is, so it was father and a son. Dad was 80, low 80s. I want to say 82 or something like that. And the son keeps the books. Dad is not paying attention to what's happening financially. He's around, watching what's going on, but not totally actively farming. The son has a business that he has created with the apples. He's got rental property. They do like a fall festival thing on the farm that produces a lot of income. And so the son listened to the book several times. He listened to my podcasts, and then dad was did not participate in any of the reading, any of the learning, nothing like that. So I ask all my questions, I explain how it all works, and dad says, the son had got up to use the restroom. Dad says, "Are you almost done here? I'm losing interest." Which is, I love the honesty, right? And I said, I am. I have like 5 minutes left, but you're free to leave whenever you want. You are not going to hurt my feelings because it frankly doesn't matter. Like, if this is not of interest to you, then there's no point in going on. Like, I totally appreciate the honesty. But dad has some universal life policies, and he's been paying on those suckers since the 80s. And one of those policies, he has $6,000 of cash value. The other one, I don't remember what the cash value was, but it wasn't very good. And the statements weren't showing like the real expenses. And maybe those were real expenses, but they were not real expenses I've ever seen. And so I'm not going to say the policies were complete crap, but if you've paid into a cash value policy, let me call it that. If we've paid into a cash value policy our entire life, our cash value should be more than $6,000. And so, so dad said to me, I ran some illustrations for the son, and dad and I was showing him the numbers and how much he makes over 30 years, right? It wasn't some huge astronomical amount of money, but it wasn't a little bit of money for doing nothing. And dad says, well, that's not good enough. I said, it's not good enough? I said, how the hell good is your universal life policy? Are you pissed off at that agent because you only have $6,000 of cash value? That's complete shit, and yet mine's not good enough? Really? So we have two things here. Two things that showed up in this meeting. Well, three. One, honesty, which I totally appreciate. But number two, I don't appreciate. The arrival syndrome. We didn't read the book. We have no idea what the hell I'm talking about. But yet you make a comment as if you know everything. It's not good enough. And after I fired back, I'm not going to say yelled at him, but I fired back because I'm not going to just sit and allow arrival syndrome to be in one of my meetings. If you want to ask me questions and you want to try to problem solve like the son was doing, because the son had lots of questions about really why would we still be doing this, right? But if you want to ask me those questions and you want to run some numbers and you want to talk about the strategy, fine. But if you want to make a comment that shows the arrival syndrome, I got no patience. And shit just happens because the filter doesn't always work. It's like it has a faulty switch. It is like you have paid into a policy forever. I was kind enough to tell you to get an in-force illustration and make sure those policies are good. And if they're not, I will help you save them. We will have to look to see what's going to happen if you outlive them, because Dad looked like he was in really good health. Now you're telling me mine's not good enough and mine is guaranteed to never go to zero and yours is at $6,000 and you are 82 years old and your cost of insurance is probably going to be so astronomical you're not going to have a policy in a couple of years. It's arrival syndrome at its finest. I had a number 2 and I forgot what it was. This, like, it is rare for me to have to do that in a meeting. And I have had, here's the other funny thing. I had 2 other meetings this week where the spouse was not on board. Okay. I didn't know this till the end of the meeting, obviously. One of the meetings I had, this sweet little couple said, we have been married. He said, we have been married over 20 years. We have had 5 arguments in 20 some years. And this morning was one of them because she did not understand why she would borrow money and pay it back when she could just use cash. But guess what? She sat through the meeting and listened. She asked questions. And I got to explain it to her. And she said, well, this is kind of a no-brainer, right? Because she was open-minded. She didn't shut everything off and think she knew everything. Why do I ask for you to read the book? So we don't have a conversation like I had to have with the 80-year-old. That's what I would be up against all day if y'all just were able to come in and have meetings with me without reading a book. That's what that meeting would look like. Because Dad obviously thought I was trying to sell him something, when in fact, I wasn't trying to sell him anything. I don't care. There's nothing to sell him. He's not even farming. He's not doing anything, right? I mean, I suppose if I was a super greedy person, I could have sold him something. But I'm not trying to sell you anything. I'm trying to teach you something. I'm trying to share some knowledge with you. But if you already know everything, there was no point in even sitting in. Arrival syndrome. If you guys have not read the Farming Without the Bank book, obviously you need to read it. Becoming Your Own Banker is Nelson's book, and he has a whole chapter on the arrival syndrome. I have a whole podcast on the arrival syndrome. And I just did another podcast on my Without the Bank podcast. I just did another one. I think today it comes out or next week, whatever, for the arrival syndrome. It, as Nelson says, you will rot. Your mind will rot if you think you know it all and you quit learning. And Nelson also says in that, it was funny because let me read this to you. It's like story time. He says, the arrival syndrome is not ignorance. It is an illusion of knowledge. Oh, that is so good. I had it highlighted in the book. You guys, I read this thing all the time. Look at how, like, it's used. I read it all the time because I forget what it says. It's an illusion of knowledge. Is that not the most accurate thing you've ever heard? Those people that think they know it all think they know it all because they have an illusion of knowledge. Then when you tell them something new and they don't even try to understand it, then I go back and I would actually classify that as ignorance. And so I think that Nelson is spot on, but I would just add the fact that, we are a little bit ignorant if we are not willing to learn something new and at least listen and come to a conclusion. You don't have to agree with me, but I'm not going to stop you and say, absolutely not. Don't even talk to me about Dave Ramsey. He is awful. He doesn't know anything. I would not do that. If you guys have feedback on Dave Ramsey, I will listen. Because I frankly don't want to go research it myself. However, I'm happy to listen. I'm happy to say, this is what Dave is saying. Great, let's actually listen to it and come to that conclusion. Right? I don't ever want to be told that I have the arrival syndrome. Now you can tell me I have some German passion, but not the arrival syndrome. Well, good morning, Miss Melanie. How is the tree farm? Oh, Bruce, I like your wife. Too much screen time and not enough story time. Awesome, Gail. Okay, you guys, I gotta go. I am late for my next meeting, but we had a lot to say this morning. Okay, let me know if you need anything. If you haven't got the book, go to Farming Without the Bank, grab the book. If you want to, message me, happy to answer any questions, any of that good stuff. I will be here. I will not be here next week. So you all have a very Merry Christmas. And then I will be here the week of New Year's. And then the next week I am headed to Oklahoma. So I will be gone for a week and I'll be down in Oklahoma. So Melanie, I may call you guys if I have some time to stop by on my way back through, because I think you're along the way, because I'm coming right down the middle of the States. Finally able to breathe just in time for Christmas to enjoy it. Okay, you guys, thank you very much for hanging in there with me. I appreciate it. As always, let me know if there's anything I can do. Otherwise, have a very Merry Christmas, and we'll see you right before New Year's. Thank you, Bruce.